Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Ira Jersey with us here at Bloomberg Intelligence. We're going to look at the inflation report. We welcome all of you across the nation, around the world on YouTube. Subscribe to Bloomberg Podcasts. And with that, we are here commercial-free through this critical inflation report. And we'll move on. Tiffany Wilding of PIMCO to join us here in a bit. But right now, Ira Jersey with us. Let me frame out equities, bonds, currencies, commodities, futures lifting, not because of Ira Jersey, lifting because of tech. Some better feeling there. Futures up 26. NASDAQ up now a solid 0.8%. The VIX comes in a bit, 15.46. You'd look for that to be better than good here in a bit. In the yield space, 10-year yield 3.85%. We'll see where that goes. Jersey looking for lower yields forward. So the inflation report that Chairman Powell cares about, we'll get that to you right now. Waiting on the screen here on the Friday before Labor Day. Takes a few seconds longer. Personal income comes in higher than survey. Spending right on survey, an elevated 0.5%. PCE all on plan, but year over year, core PCE disinflates a little bit off survey. Last month, 2.6%. This month, 2.6%. We looked for an elevation there, but pretty much PCE on plan, where spending came in from 0.3 up to 0.5 on survey, and personal income did a little bit better. I'm waiting for the revised numbers. We'll get them out in a moment. In the markets, the VIX comes in a more bullish 15.25. Futures at up 26. Pretty much stasis. Maybe a little bit of a bid to the NASDAQ, up 0.9% right now. In Ira Jersey's yield space, I'm giving him time. What the racket here, folks, is I got to do this data check half as good as Karen Moscow while we let Ira Jersey and David Gura sort out the details. 2-year yield, 3.90%. A little bit higher yield, but the yield's not really moving all that much. I look at the 10-year real yield, 1.69%. Did I do okay there, David?
That was great. I mean, you walked. Do we get the revision? We got the revision there.
It's just
real
coming
personal
in.
0.3%.
Yeah, and again, personal spending revision was a tick higher. This is important. We continue now with Ira Jersey of Bloomberg Intelligence. Ira, I guess it's on plan, on survey, and yet there's a lift involved, isn't there?
Yeah, so I think when you look at the headline data overall, and obviously we'll have to focus in on the details. Like I mentioned, I want to see what services spending was like and services inflation. But the economists got it right this time, I think, more or less in terms of the pace of inflation. Interestingly, we haven't really slowed much, right? So July didn't see a slowdown in inflation, but still 2.5% on headline and more or less right there on core inflation year on year has to give the Federal Reserve at least a little bit of comfort that they, if they cut interest rates and they go slowly, that inflation can continue to come down at least a little bit. The data that you mentioned, personal spending higher month on month, although in line with expectations, that's actually a decent sign, right? So the idea that we're having a soft landing is certainly playing out in this data for this 1 month. Will it persist? I don't think so, but at the same time, you have to take the incoming data and put that into your thinking and your entire outlook going forward.
Tom, I'm going to lob one at you if I can. I mean, you were out in Northwest Wyoming last week when the Fed chairman spoke, and we've said all morning, as we say all the time, this is the Fed's preferred inflation metric. How important is this reading to the Fed? I look ahead to next week, of course, in the jobs report, which strikes me as being so paramount in comparison to this one. What does this one mean to policymakers?
As Ms. Bowie of Chatham Financial said, she's looking at service sector inflation in Europe, France with disinflation, Spain with disinflation. Ira, here 3 minutes in, do you have a service sector statistic yet? Because I think that's what they're waiting for in Jackson Hole.
I'm waiting for the some of the details to come out on the terminal, and it's the inflation number by sector is not out yet. But when I look at things like the personal income data at 0.3% and disposable income still up 0.3%, that's actually a pretty good sign.
I agree.
The fact that you have disposable income continuing to rise at a reasonable pace means that spending might continue to be robust, at least for the near term.
Ira, thank you so much. He's got to go dive into the data. Ira Jersey will publish for Bloomberg Intelligence here within the hour. He's also out with new forecasts, 3.66%, sort of a blended fan distribution of the 10-year yield. And that yield right now, pretty much unchanged, 3.86%. On the economics of the moment, Tiffany Wilding joins from the Pacific Investment Management Company, PIMCO, where she is the Managing Director, Economist, North America. Tiffany, I know you have to wait and dive into the data. The media frenzy here at 8:34 is unfair to you. But the feeling I get here is trend-based disinflation. Am I off the mark?
Yeah, I mean, what I would just say, taking a step back, when you look at a wide range of data, it is getting back to, some semblance of pre-pandemic. You look at headline inflation levels. There were some stickier pieces of underlying inflation, but now that labor market adjustment looks like it's happening more fully, those pieces of stickier inflation will be trending back to target. And so when you kind of look around the economy, things look, like they're getting back to some semblance of normal after the unique set of shocks that we had post-pandemic. And I think the thing that's not as normal that really stands out, obviously, is the policy rate. And obviously Federal Reserve officials understand that. Powell was very clear at Jackson Hole that they are going to start that journey back to normal, or at least kind of what they think could be normal. And and the pace of that is really going to depend on the data from here. And if we see economic weakness, then they'll go faster.
Tiffany, I really appreciate that. I'm kind of situating it in this moment, the way that we had Brian Levitt doing it, Katie Kaminsky earlier in the show. This notion that there has been this kind of post-pandemic readjustment that might not be as notable or as noticeable as the kind of initial adjustment that we had. Where are we in this cycle as you see it? When you look at what we're getting in terms of inflation data, pulling back more broadly to look at labor data as well, give us a sense of where this economy is as you see it.
Yeah, well, I mean, I think the labor market data has been, sort of confusing, if you will. The usual signs in the labor market of an underlying economy that's not doing well, i.e. the unemployment rate rising, I think is a bit of, you have to, kind of dig into the drivers of that indicator. Because if you just looked at the labor market and you looked at nothing else, you would be incredibly worried about a recession. But if you look at a broader range of indicators of the economy, it looks like it's doing okay, right? It's a soft landing. If anything, the activity data, the growth data, the GDP data have been coming in better than expected. So I think you have to, kind of take a step back and, just again, understand that there's been a unique set of shocks since the pandemic. It's made indicators, usual economic indicators, more difficult to read. And I think the unemployment rate right now is one of those things.
I mean, difficult to read. I'm sorry. At a 3% real GDP ending June 30, I got a 5.5% amateur's look at nominal GDP led by Newport Beach, California. I mean, Tiffany, we've been wrong on the resilience and spirit of America. When you sit with cynics like Jerome Schneider and the other animals at PIMCO, are you trying to tell them it's not as bad out there as you think?
His words, not yours.
Yeah, I mean, I think I guess the point that I would just really emphasize is that, when you look at the labor market, the things that have driven the unemployment rate higher this time is more about labor supply. Obviously, over the last few years, we've gotten a surge of immigration, and that has resulted in a higher unemployment rate because you just have more people in the labor force. You're not actually seeing layoffs. Now, certainly we could start to see more material layoffs across the economy. But, I would just say overall, the things still appear relatively strong. And usually when you have labor supply gains, that's actually good for the economy. More people are consuming, more people are working. It's not usually the time where you're going into recession.
Tiffany Wilding, thank you so much. Greatly appreciate it this morning here. Our team has just done a wonderful job. I can't say enough about the intelligence of the conversations through all of this week. As we had Catherine Kaminsky in earlier with Alpha Simplex, wicked quantitative, Massachusetts Institute of Technology, think Andrew Lowe. She knows where Epsilon is. Someone with the same prodigious chops is Cam Dawson, NewEdge, who joins us right now. I think also with a much more almost Barron's-like focus on, hey, here's the confidence to be in the market. Thrilled to have you here. Thank you for coming on a Friday. Before Labor Day. Tucker's working Monday if you'd like to come in.
Look, it gave me a chance to wear my white. The last chance.
Lovely. Who are we wearing today?
Well, it is a sartorial hook slide of white into the Labor Day holiday.
Very good. Yeah. Good. Gura's serving lobster rolls in the 10 o'clock.
Right, yes.
Hour. Cam Dawson, how do I have confidence to be in the market? You're wonderful at this. Frame the belief construct to own equities now.
The belief construct is that the 12-month forward EPS estimate continues to move higher in this market. And if we look at over the last 5 years, that has been the North Star guiding light of what to do with equities. Exactly. Which is that as long as that is lifting, then all of this volatility and oscillation that we see in the short term should be something that we can look through. Now, if that starts to level off, meaning the growth rate in earnings starts to slow, that's when you get a choppier sideways market. We do think that that's a risk for 2025, but not something that necessarily says run for the hills, get out of your equities, take big capital gains.
My theory on this is corporations adapt. I think we're seeing it in spades, whether it's a resurrection of Dell Computer, name whatever you want. Intel with this huge news today from Bloomberg News that they may do some form of gross restructuring as well. Day to day at NewEdge, are you seeing corporations adapt? I am.
They say that necessity is the mother of invention, and that is exactly what we think that we are seeing, given the fact that look at the backdrop of pricing power. If we go back to 20 and 21, you had massive pricing power that allowed companies to raise prices, and that drove margin expansion. That's gone. Companies are no longer able to push price to customers, which means that they have to get margin expansion out of invention, out of innovation, out of applying new technologies. Now, the challenge we see in 25 to get it back to earnings is that you already have a big amount of margin expansion priced in. So it just means that companies have to deliver on those high expectations in order to get to the 14% growth that is projected.
One of the things I've learned on this show is it's good to crib a question that Tom has asked, reword it slightly, and put it to another guest. So I'll do that. We had Katie Kaminsky on. He asked about if you can extrapolate any kind of trend.
Don't feel bad about
NVIDIA.
that. I used to do that with Ken Pruitt. Ken Pruitt would ask a question, and I would just reframe Ken's question. It made me look brilliant.
Rephrasing it and reframing. When you look at NVIDIA, is there any kind of trend that you can apply to that or that you see? It's something of such focus. What more can we make of that, if anything?
Well, I think Katie was so intelligent in talking about the parabolic move that you have seen in the stock, which makes it really hard to sustain. The thing with parabolic moves is that they can last longer than expected, but as Walter Deemer says, when they go up in a straight line, they typically go down in a straight line. So it's something that is hard from a trend basis.
You don't remember 2000. No one in the studio, no one in the control room remembers 2000. That's why we're playing classic rock today. Don't play Journey today. You guys spit out his coffee coffee yesterday when I played Journey. Cam, Journey's a band from California. Cam, I'm looking here, and Wally Deemer, of course, is a legend on this, but the answer is trees to the sky. 1999, 2000, without profit. This time around, I got free cash flow. That's a distinction.
You do, but you always have to be aware of when stocks are running ahead of what the earnings estimates have been being revised higher themselves. So if you look at a name like NVIDIA, in prior reports, each time that they would report, the forward guidance would go up by 30 cents or 40 cents. This time, it's about 5 cents. Is that the end of the world? No, but it does mean that we should probably lower our expectations for the pace of returns simply because the pace of earnings revisions higher are starting to slow. The issue would be if the stock keeps going up, even as earnings slow down and the revisions higher, that's when you get the trees growing to the sky, the issues with valuations being far too stretched.
At this point in the earnings season, are we talking too much or focusing too much on tech? What else is sort of drawing your attention, or what is tech distracting us from?
I apologize. It's such a Brooklyn question.
Curious.
Only people from
let's
Brooklyn
go Luddite. Let's go old school. What other sectors?
But see, I speak that language. So I think that the interesting thing about this earnings season is the reaction of the stocks in the backdrop is that we've seen some of this weakness in tech start to build. Tech traded below its 50-day moving average yesterday. It's been deteriorating on a relative basis. What's been winning? The 493. The equal weight index. So if we look at earnings estimates going into 2025, what you can see is the Mag 7 is expected to decelerate a lot, but the overall market is expected to accelerate, which effectively says the 493 is about to have to carry all of that weight in the earnings growth.
In conservative 3-year short-term money, what we call retirement plans, am I more index or more active right now?
I think you have to be both. It's not a black or white, it's a sliding scale. In indices that are highly concentrated, it does not pay you to pay for active management. In indices that have a great deal of dispersion, you can pay for active management.
So 2 industries, give me an example.
So the difference between the growth sector and things like small cap and international and value. We think that there's a lot more opportunity to outperform and get alpha in those indices, small cap, international value, where you have a lot more dispersion between winners and losers.
When you're great at this, will international get a jump start off legitimate weak dollar?
It has been in a relative downtrend for the past 15 years. The weak dollar is an absolute necessity for international to be able to outperform. The only time you've had big international bull markets is in big dollar bear markets. The only problem is that it has to translate to earnings. The most fascinating stat is that if you look from 2007 to today, U.S. earnings in the S&P 500 are up 150%. International EFA index, they're flat. The emerging market index, they're still down versus 2007. It's an earnings story, not a valuation story.
One more question, David.
Let me go back to today's data. We go to today's data, to what you heard at Jackson Hole. This is a Fed that has been, for these last few years, so united. There has been such unanimity. Do you sense that the remarks that we heard from Fed Chair Jerome Powell are widely shared? What are you listening for in the commentary that we're going to get before this meeting on the 16th and 17th
Did you see what she wrote? Did you see her research note?
Did I?
Jon Ferro introduced me to Love Island.
Yeah.
And the British Love Island is different.
Do you watch Love Island?
No, Ferro taught me.
You
that
read his Cliff's notes.
in 90 Day Fiance or something.
Yeah.
Ferro, all this garbage from London, Ferro introduced me to. And so Cam doesn't have Love Island. She's got Dove Island.
Dove
Okay.
Island. Yeah, and that Jay Powell may be the only bombshell on Dove Island. It's really interesting. The one word missing from that Jackson Hole speech was patience. And that's the one word you've heard from every other Fed voting member, which just means that Powell is thinking, I could do 50. Other voting members are saying, no, slow and steady, 25 basis points, more evidence, we can take our time.
Cam Dawson, thank you so much. NewEdge here. Justin Sink is going, why am I here? Futures up 26, off of the news, PCE, ebbed a little way, still up 17. NASDAQ was up 0.8%, now up 0.7%. He is our White House correspondent, and things have changed. Justin Sink joins us right now. Justin, what has changed? It's 1600 Pennsylvania Avenue.
Well, I think there's a lot of changes both, at the White House itself and in the race overall. So, at the White House, it's a completely different posture from just 5 weeks ago when Joe Biden dropped out. There's been significant staff turnover as people exit to either find outside opportunities or go join sort of super PACs and affiliates. The president himself has been on vacation now. This is his second straight week. I don't know if he's seen any whales, unfortunately, but he has just kind of scaled back his cadence overall. And I think it's mostly because they're trying to stay out of the way of Kamala Harris. And as Bloomberg's swing state poll that came out today showed, it's working. It was a sort of undeniably great poll for Kamala Harris. Shows her sustaining and building on that momentum that she got from taking over the ticket from Biden, and now has either a tie or a lead in all the major swing states. So at the White House, I think a lot of what they're trying to do is just bolster her where they can, but otherwise stay out of the way.
Justin, you mentioned that cadence, and I wanted to ask you about President Biden's ambitions. And watching that conversation last night between the vice president and her running mate and Dana Bash of CNN, there was a lot of due deference to and mentioning of the current president. What are his aspirations going forward? So once he gets back from this vacation, gets back from California, comes to the East Coast again, what does he hope to accomplish? How clearly articulated is that mission or that vision by the White House?
Yeah, I think there's a couple elements to it. One is sort of legacy protection. I think the president's going to go out and make the case for why his first term was a success, even though it's something that voters don't necessarily agree with. And there's two reasons for that. One is obviously self-interested, but the other is because it helps Kamala Harris. And you heard her in that interview last night. She didn't back away from the economy. She didn't back away from the way that he's conducted foreign policy. And foreign policy is probably the second major focus for the president right now. The sort of hostage ceasefire deal in the Middle East is the last big legacy item sitting there. And I think that's going to be a big focus for him, especially as he might ramp up some farewell foreign travel in the last few weeks.
All right, Justin Sink with us right now. David Wasserman to be with us here later on in the hour. Raptor on some good equity coverage. Futures up 16. I'm asking a question to both of you. I want two answers. Justin Sink, David Gura. Are you supposed to campaign on policy, David Gura?
Yes, although there is this kind of move to the middle, as we talked about a little bit earlier
Richard
in this show.
Nixon didn't campaign on policy. It was the whole crime thing. That's what he knew would get votes.
This is such a strange campaign in so many ways, obviously paramount in the sense that it's moving very quickly here, and it's a very short, compressed campaign. And so we have seen the Harris campaign putting out more policy positions. I won't say policy papers, but more definition there. There has to be a nod to policy, and herein lies the trickiness of this campaign. The Democratic campaign is differentiating itself at least somewhat from the incumbent president.
So Justin Sink, you're at Chicago, buried in American politics and government. You're studying this. In the old days, did they talk policy in a campaign? I would suggest they didn't.
And I think that as much as Bloomberg readers and listeners want to hear about Vice President Harris's policy, that's not what that campaign is really interested in forwarding. They just keep hammering the idea of joy and of change. And it's not different from hope and change that we had with Barack Obama. There's policy underpinning it. They've made a push on housing. They've made a push on helping the middle class address some costs. But genuinely, what they're trying to present the American people is this idea that, hey, we are turning the page on a decade and a half era of Donald Trump and Joe Biden that you've frankly grown tired of.
Justin, when I look at that polling that you mentioned a moment ago, yes, the headline numbers are astonishing, how well the vice president has carried that momentum forward. But I looked deeper at some of these issues, and I think the thing that surprised me the most, and I imagine delights the Harris campaign, is what they hoped would come to pass. That is, Vice President Harris could campaign on the economy, and voters would, if not forget, seemingly forgive the fact that she has been part of this administration in the White House. I mean, you look at sort of how they feel about inflation, how they feel about the economy. They're giving her maybe not a pass, but more of one than they were giving President Biden when he was running for re-election.
For sure. I mean, on the question of housing, which is obviously a key issue and a big struggle for Biden, they give Harris a 4-point advantage over Trump. There's a 7-point advantage on who helps the middle class more. And it really suggests that people are willing to sort of put it all aside and say, Harris, we see as a totally different candidate, even as she's continuing to champion a lot of his policies.
Okay, I'm going to ask the question everybody wants to know. I don't care what your politics are. John, how many polls were released in the last 24 hours? Like 8?
I think about 600 polls.
About 600 polls in August.
That's within the margin of error on that guess.
We're polled out. I mean, I'm sorry. Great polls. Love what Iowa does. Love what Bloomberg does. They're all great. Do you actually study the polls, or are they just noise to a pro like Justin Sink?
Well, I think to me the biggest question is, are we in a honeymoon or not, right? A lot of the polls are saying the same thing right now. But Kamala Harris is coming off of a convention that was really great. And while these polls are good, they're not runaway. And so you got to really put a grain of salt in all of this, which is we're within the margin of error on, nearly all of these things. And this race is going to go down to a razor's edge. So while it's, you'd rather be Harris than Trump right now, I don't think anybody is kind of saying that this thing's over.
Justin, thank you so much. Justin Sink at the White House, at our news bureau in Washington. Victoria Fernandez knows this. She's with Crossmark Global Investments, and she's joining us in the studio because it's cooler in New York than it is in Houston.
Absolutely.
That's all there is to it. Thank you so much for joining today. Is the battle won on inflation? And if you have disinflation, does that mean earnings are worth more?
Well, I don't know if I would say the battle is won on inflation. I think we're heading that way. I know, Powell has come out and said, look, we think we're done there, and they're moving on looking at the labor market. But there's a lot of underlying elements in inflation that I think can still hold us up towards this 3% level. I don't think it's going to go away as quickly as the Fed's anticipating. So when we look at the idea of 100 basis points cut from now through the end of the year, I think that's a little optimistic. I think we may see fewer than that because there are other elements.
In the Bob Dole, Victoria Fernandez world, my money question is simple. What are your clients doing? Not the talk of strategy, but is the exuberance there? Have we reached a bull market silly season?
It's interesting. Earlier, people were talking about the 60-40 portfolio, and I will tell you that is what we have seen coming in from our clients more than anything. They want that balanced strategy. They're not exactly sure what's going to happen with all of the uncertainties that we have, whether it's here domestically, whether it's geopolitics, whether it's inflation, the concerns about the consumer. Having that diversification in their portfolio is what they want, with a little bit of extra kick on something. So maybe that's a covered call strategy. Maybe that's a little bit of a long-short component. They want to be invested in the market, which we agree with, but they want to be a little bit cautious. So they've been listening to what we've been telling them.
Triage those risks for us. They come to you worried about all those many things, what's happening overseas, inflation, the election, what have you. Mm-hmm. How do you rate all of that? What do you see of those risks as being the one that, is something that should strike fear in investors right now?
It's going to take turns, right? There's going to be different elements that kind of rear its head at different point in time. Obviously, as we get closer to the election, that's going to cause more volatility in this market. The thing we have to look at there is, you have to have a lot of these things passed. We have to have a government that changes dramatically. I'm not sure a lot of it will come to fruition. So what we're looking at is more when it comes to the consumer component. We think that's key to this market, the labor market and the consumer. We got the spending and income numbers today. Again, we have spending almost double on a percentage basis what income is. That does not bode well as credit card delinquencies go higher, as savings rates go down, as wages stagnate, as job losses increase. So to us, that's what we're most worried about.
Victoria Fernandez driving the market higher, up 0.8% on the NASDAQ, Dow up 132 points. It's like the ascendance of the Houston Astros.
Uh-huh. There's just nothing better now.
It's just like the time of year. It gets under 80 degrees in Houston and the Astros start playing.
And the bats start flying.
The bats start flying. My good friend Jim Cramer and I agree that the fact is on stocks, if you're lucky, 30% of stocks at any given time are doing well. Within financial wealth management, are you focused on owning the 30% and not owning the 70%? How do you try to find excellence in alpha in the winners that are there?
So it really comes from that fundamental analysis that we do. We're not looking so much at trends as looking really at what do the cash flows look like on these companies? You know Bob and how he likes to dig down underneath, right? We want to look at persistence of earnings, predictability of earnings. These are the companies we like. So do we aim towards certain sectors? Sure. Right now we're looking at healthcare. We've been investing in financials. These things have done well for us. But within those sectors, even within staples, you want to look at those companies that have that stability that can continue to generate good returns during volatility. So that's where we focus, looking at those underlying factors.
What is your takeaway from what we've seen with NVIDIA this week? And again, I just remark on and laugh at the way that those results were characterized, that you could call that kind of underwhelming or not what the market wanted. What's your perspective on that, and what takeaway can we take from that, just about the way that we look at the performance of companies and their projections going forward?
So we've been a little different than probably most people out on the street, where we've been trimming those high growth tech names all year long, anticipating that at some point you're not going to continue to grow at 400% year over year, right?
Hard to do.
So you can still have great numbers and the trend be slowing, and that's what we saw with NVIDIA. So I was a little surprised that the market reacted the way it did. I mean, still solid numbers there, but what it tells us is the breadth is growing. We've all been waiting for that all year, to have that breadth in the market. We're seeing it in stock prices. I want to see it in earnings.
Fidelity out with the number of millionaire 401k. How do you manage $1 million 401k differently than a $150,000 401k? Are they all the same?
You're not going to manage it differently in the idea of where you want to allocate your resources based on the macro that's out there. Your strategy will be the same. Can you have a little more diversification? Yes. Can you maybe add a couple extra elements of something into that portfolio to juice income a little bit? Yes, you can do that. But from the 100,000 foot level, you're investing the same.
Houston. Overweight, energy, it's genetic. Victoria Fernandez on energy.
Look, energy has been struggling. We know it's one of the sectors that has not been doing as well, even though you look at balance sheets, you've got some strong balance sheets there. There's some cash there. They're waiting, right? They want to know what policy is going to look like going forward before they jump in and put a lot of CapEx to work. If you take tech out of the equation, CapEx is actually coming down. Some of that has to do with the energy companies. We anticipate seeing that turn. So we think you need to have some exposure, probably go for some of those big integrated names at this point.
I get one more question here. Michael Barr's got to get in here and do the news. Victoria Fernandez, can I do a major shout out to Texas A&M with the only real football game this weekend? Notre Dame, Texas A&M. I mean, we had Brian Levitt on from Michigan.
Who are they playing with? Fresno. Michigan,
come on. You'd figure Texas A&M would be playing, the Teachers College of Louisiana or whatever. I don't know. Victoria, that's very cool.
Yes.
To see Notre Dame playing Texas A&M is like, that's a Texas spirit.
That's exactly right. Let's go Aggies.
We're going to have to see. Give me an oil price here. Crossmark, you guys live this stuff. Brent crude, West Texas Intermediate.
Yeah, I mean, look.
Stability or higher?
I think it's going to go a little bit higher, but not tremendously. We're not looking at $100 coming in. Do we go around to 80 and stay there because of geopolitical reasons? Right. We can, but I also don't think we're going to go too much lower. Demand is still there. There's still some supply concerns, so I think you'll be pretty steady around the 80 level.
It's the religion, folks. Our team has done a great job today of giving this to you with our equity coverage. You have to be in the market to participate and win. Robert Dahl, Victoria Fernandez, Crossmark, live that every day. Thank you so much.
My pleasure,
Have you
guys.
moved to New York, or is this just like a visit?
Nope, just visiting, getting my daughter ready for her senior year at NYU.
All right. Congratulations.
What's she taking?
Wow.
She is journalism and politics.
Oh, no.
So you know what? You can have her come sit right here.
I saw you 10 minutes ago with Mike. Is that what that was?
Yeah, we're going to bring her on in. But you know what? Her favorite show? UK Love Island. And I heard a little bit of
Also
you saying
Tom's
that
favorite show.
earlier.
We love it. Yeah.
Victoria,
you may want to
great.
talk to her about that.
No, you talk to Jon Ferro about that. That's if you're at NYU and you're watching Love Island, that is a resume builder.
She's well-rounded.
Victoria Fernandez, thank you so much with Crossmark. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.